Hey everyone, welcome back to the channel. It's Tuesday, March 17th, 2026. Happy St. Patrick's Day, and markets are still feeling the ripple effect from the Iran conflict. Brent crude is holding above $100 a barrel, stocks are mixed in early trading, and inflation worries are front and center again. In the next 5 minutes, let's explore what's happening right now, why it's impacting portfolios, and what it means for your market journey this year. The conflict is entering its third week, with ongoing U.S. and Israeli airstrikes on Iran, Iranian responses including cluster missiles, and persistent threats to the Strait of Hormuz, where about 20% of global oil flows. Brent crude spiked last week and remains elevated around $102 to $104 today, off the $106 highs, but still pressuring energy costs. Gas prices are climbing nationally, and that's feeding directly into inflation fears. Higher input costs for everything from transportation to manufacturing. This creates a tricky environment for the Fed. Investors were hoping for continued easing, but with oil-driven price pressures making inflation stickier, rate cuts are getting delayed. Some forecasts now push the next one into 2027. The new Fed chair transition, Kevin Warsh nomination sent to Senate earlier this month, confirmation expected around May, adds another layer. A hawkish lean could make the rate-cutting dilemma even tougher if inflation stays elevated. Market reaction so far. Stocks are mixed this morning. Nasdaq and S&P showing some gains on tech rebound, like Meta News, but the broader risk-off tone from last week's oil spike lingers. Defensives and energy sectors have held up better, while high-growth names feel the pressure. This is a textbook example of how external shocks create volatility and rotations, away from momentum toward value, commodities, or even gold as a hedge. For your market exploration journey, moments like this are gold for learning. They show how interconnected everything is: geopolitics, energy prices, inflation, Fed path, stock moves. We've talked in the project about markets spending most time in grinds below highs. This is one of those phases. Events like the Iran situation test patience and highlight why diversification matters. Spreading exposure across sectors, geographies, and assets can help weather the swings. What to watch this week? Oil inventory reports and any fresh Iran de-escalation or escalation. Headlines. Upcoming CPI and jobs data. If inflation surprises higher, expect more chop. Betting markets on Iran resolution. Odds remain low short-term, but could shift quickly. The key takeaway: these shocks are normal in the market cycle. They remind us to focus on risk management, diversify, hedge volatility when it spikes, and avoid knee-jerk reactions in the grind. Stay curious, stay prepared, and use these moments to deepen your understanding. What's standing out to you right now? Oil prices, Fed signals, or the geopolitics? Drop it in the comments. If this helped connect the dots, hit like, subscribe for more real-time breakdowns, and turn on notifications. Thanks for watching. Stay sharp out there.